It's almost 11 a.m. in Hong Kong, 1 p.m. in Sydney. Welcome to Bloomberg Markets Asia. I'm Paul Allen. Here are the top stories. Asian equities rising on the back of gains in U.S. technology shares. Nvidia tops $3 trillion in market value, beating Apple, now only trailing Microsoft. India's stock futures gain after Indian Prime Minister Narendra Modi wins crucial backing from two allies in his coalition to secure a third term in power. And China's property stocks on track to enter a technical bear market as doubts remain over Beijing's efforts to bolster the sector. All right, busy day. Let's check in on how markets are faring. Avril Hong is in Singapore. Avril, what are you watching?
Yeah, Paul, lots happening in the Asia Pacific. I mean, look at the way that the stock gauge here is performing. It is a tech-led rebound after the mega caps, the Mag 7s rallied overnight in the US, and we saw Nvidia powering past $3 trillion in market cap. First time we're seeing this from a chip company that's lifting the TAIEX. Kospi, of course, we will get that reaction tomorrow. Markets in South Korea are shut. Japan is also doing well, but a couple of other things we're watching, of course, the India stock futures after that recovery on Wednesday from Tuesday's plunge. Our MLive contributors have been pointing out that for India stock markets to extend the rebound, what it really needs is for institutional investors to step in, kind of help things along. We're seeing currencies recovering as well after the softer US dollar. But flip the board, because as I say, it's really about tech today. And if you focus on the stock of TSMC, it's hovering at a record high. A lot of things happened in the past 24 hours. We had one of the companies that it partly owns announcing along with NXP that it is setting up shop, a chip plant right here in the Lion City. But more importantly, perhaps for stock market investors, is Morgan Stanley upgrading its price target for TSMC. It's saying that Nvidia has acknowledged the value of TSMC's foundries business, so it's likely to raise fees. We also have TSMC itself talking about share buybacks, that announcement coming in today. So this is what we're seeing in tech. But flip the board, because we've also been keeping a really close watch on central bank action after the Bank of Canada, the first of the G7s to cut, really sending that message, we're okay with going ahead of the Fed. The ECB is next. It's expected to cut, but beyond the decision later today, that's really not so clear. Paul.
All right, thanks very much, Avril. Let's get some more on that upcoming ECB decision. Get over to our MLive executive editor, Mark Cudmore. So, Mark, the ECB's been pretty clear about telegraphing this very likely cut that we're going to get later today. But as Avril mentioned, then what? Is it going to be back-to-back cuts or a breather?
Yeah, it's all about the guidance today, Paul. The cut is fully priced. It's whether the ECB provides clarity on their rate-cutting path from here. And I actually think the market might be disappointed. The majority of kind of fund managers I've spoken to and notes I've seen this week, even from the sell side, seem to be kind of hoping that the ECB will provide that kind of clarity about what their pace of cutting from here. But I think the fact is that we're seeing a little bit of an uptick in terms of European growth expectations, inflation staying sticky, and I think they're going to use the playbook that's the Fed has adopted of its data dependence. And I think they're not going to commit to a very strict schedule of rate cuts. And therefore, I think because the projections will show a slight uptick in inflation and growth kind of go out the next couple of years, nothing dramatic. I think, in fact, there might be a chance for a little bit of rates upside in the coming weeks in Europe. And I think that'll kind of fuel the euro-dollar move that we've started to see climb higher in the last week or so. I think that can continue a bit further.
Yeah, you mentioned sticky inflation there. We have seen price pressures easing across the Eurozone, but are they easing quickly enough? Are they easing sustainably enough? Is there a risk here that back-to-back or even a second rate cut down the track might reignite some of those price pressures?
Yeah, look, they've eased quite quickly. I mean, obviously, it depends by nation. One of the things that's hard for the ECB is that the Eurozone is a mix of economies that aren't entirely in sync in terms of their cycles. They're working on very different kind of inflation stories. But the fact is, the services side of inflation has remained pretty sticky, as kind of expected. And what's happened now is that the volatile goods component is starting to get a slight bit of a reinflationary impulse. And so, therefore, I think the optimism around current inflation isn't so high as it was even only a couple of months ago. And that's why I think that, for me, I think that, the first part of this year, the story was the narrative of pricing out all those rate cuts from the Fed. I think that the story for the second half of the year is that, hey, maybe the rest of the world also won't be able to cut rates as much as we were kind of thinking even only a couple of months ago. And therefore, there's more rates move higher from the rest of the world as well.
Yeah, well, ahead of that, we are seeing some modest gains for the euro at the moment. I want to talk a little bit more about the FX macro fundamental scorecard. Are things calming down a little bit in terms of volatility, particularly with these elections now out of the way in markets like Mexico, South Africa and India?
What's really interesting is, in fact, these elections, despite the massive moves we've seen this week, despite the volatility, they haven't actually really changed the long-term fundamentals. So on the FX macro fundamental scorecard, Mexican peso has been a long-time favourite, but actually it took profit on that long-term bullish stance in Mexico back in May, a month ago, ahead of the election, because the move had really kind of gone far enough. On a carry-to-vol basis, it was still appealing, but it was becoming more appealing elsewhere in the world, just because volatility was starting to rise, implied volatility, because of the election and because the US election later on this year. So I think the Mexico trade had kind of run out of steam already in May, and now we're just backfitting it around the election story, which isn't really a particularly negative story. And it's the same in India, that we kind of had priced it to perfection. We'd priced this idea that this really, really expensive stock market could have another kind of bullish impulse again if Modi got a supermajority. It's not that the outcome here is particularly bad or disappointing. It's maybe mildly disappointing, but it's just that the stock market was very expensive. I think for Indian stocks, they're going to continue to probably have some tough period for the next couple of months because they are so expensive. However, I think bonds will still do okay because the JP Morgan bond index inclusion, and because of that, I think the Indian rupee will do okay. So I think it depends which asset class where you see the sustained pain or not. And I think South Africa, look, expectations there are much lower anyway. So the fact that we haven't got an ANC outright majority for the first time since the 90s, I think people will move on from that quicker. South Africa has a permanent stability premium into its assets already, and the uncertain election outcome hasn't changed that massively.
Yeah, I mean, you say the rupee is going to be okay, but is there a certain degree of trepidation around the election outcome in India as well? I mean, it's very easy to say, oh, look, Narendra Modi has a third term, but if we look at the composition of his government now, got a couple of minor coalition partners in there that have a history of being somewhat fickle. Is there volatility ahead for the rupee potentially?
Not massively, and in fact, actually, that's one of the things why the rupee trade will probably remain strong is that, look, dollar rupee has continued to grind higher over the last 20 years, but being long the rupee against dollar has returned massive amounts. If you've been long the rupee against the dollar over the last 20 years, you've returned 120%, despite the fact that dollar rupee is at the highs. This is because you get the carry side. And the key point about the rupee is it remains an exceptionally stable currency. It's part because the RBI managed that stability. So any kind of volatility we get, even if you take even like Tuesday, we had record outflows from the stock market. We had $390 billion wiped off the stock market, really dramatic numbers, and the rupee fell 0.5% against the dollar. And that kind of shows the fact that this is an exceptionally managed currency. So because you've got that support from the central bank, because you're going to have those bond inflows as well, well, you can earn an immense amount of carry for a relatively stable currency. And the fact is, this is a country still with an exciting growth story that the world wants to be more exposed, so you continue to get those inflows. So the Indian rupee on a total return basis will continue to be a regional outperformer, even if on a spot basis it doesn't look like it's doing as well.
All right, MLive Executive Editor Mark Cudmore there. Let's talk a little bit more about events in India because, of course, as we mentioned, Prime Minister Narendra Modi, he's won crucial backing from two key allies, and this is going to allow him to form a coalition government and extend his decade in power. So for more on this, let's bring in our South Asia economy editor, Ruchi Bhatia. Ruchi, it's an interesting situation, this. Modi has now got coalition partners, something he's not necessarily used to. Two parties with a history of switching allegiances. Do we know what concessions that Narendra Modi has had to make to bring these parties on board, and how is this going to affect the reform agenda going forward?
Hi, Paul. Good morning. You're right. These two allies that Modi has now, gotten on his side. Both these two allies have had a history of switching sides. And what we do understand from reports coming in from local media is that both these two sides and two allies have sought for chunkier ministries and the post of the speaker as well. So that's something that we will have to wait and watch out for as to how these negotiations really pan out. The swearing-in ceremony is likely now on the 8th, as per local media reports. So one really has to see as to how Modi will really be balancing out his coalition partners, because, as you rightly pointed out, in the last decade or so, he's had a run all by himself. But managing coalition partners will be pretty tough. And he also has other challenges, on his hand. For example, high unemployment for youth that we see in the country, the fact that inflation still continues to be high, the RBI is in no mood to cut rates anytime soon, and on top of it, the fact that rating agencies are keeping a close watch, because coalition partners would mean that perhaps Modi will have to focus more on welfare-related spending, and that could mean that he may deviate from the existing fiscal consolidation path, something that the rating agencies, especially S&P, that has put India on a watch for a ratings upgrade, will not really like.
Well, you mentioned the sticky inflation there in India. It's not unique to that country, but we do have an RBI decision due on Friday. If there's no real mood to cut rates, what are we looking for in terms of commentary?
It's perhaps going to be the 8th time that the central bank will keep rates on hold, which is about 6.50 or a 6-year high for the repurchase rate, the key rate that we watch out for here in India, and mostly on the back of the fact that inflation still continues to be sticky. It is over the RBI's target aim of 4%, and the RBI is unlikely to move anytime soon until and unless inflation is durably at the 4% level. And once we also have some sort of a clarity on what the Fed rates are going to look like, traders also will be watching out for the RBI's stance on liquidity, especially ahead of the index inclusion that is likely to happen over the next few weeks.
All right, South Asia Economy Editor Ruchi Bhatia there. Still to come on Bloomberg Markets Asia, Aberdeen is going to be joining us to talk about their outlook on Indian markets. We'll hear why they're bullish medium term, and that's despite this week's surprise election result. First, though, we're going to check in on the AI frenzy. Nvidia's market value leapfrogs Apple's and tops $3 trillion. We'll have more on that next. And we'll leave you with a look at a Bloomberg webinar which is underway right now. Eurasia Group founder Ian Bremer and JP Morgan's Rajiv Batra discussing what went wrong for Modi with our colleague there, Manika Doshi.
Is it because we're seeing some sort of rebalancing now that there are some green shoots of a possible recovery in China? Are there other allocation issues that are going on that are stopping foreign investors from coming into India? You said to one of my colleagues before this election happened that you expected to see global funds position themselves as India buyers once the election event was out of the way. Are you saying we should prepare for more flows now?
Yes.
All right, so let's take a look at this chart here on the terminal. Nvidia, the company of the moment, joining the $3 trillion market cap club. And there you see it overtaking Apple. The last time this happened was, it was a very long time ago when both companies were not worth very much at all. But look at the picture now. Nvidia now just trailing Microsoft in the tech space as the biggest company. Let's get a little bit more on this huge rally in Nvidia. We're joined now by Kaya Pav, CIO at tech infrastructure company Credilink.ai. Kaya, thank you so much for joining us today. So we just see there now Nvidia surpassing that $3 trillion market capitalization, really extraordinary sum there. But we've got another chart on the terminal that I'd like to show you as well. The run-up in Nvidia has been huge, and that's an understatement. Do you feel like perhaps we could be getting close to bubble territory here? Do you think maybe a pullback is due in this stock, or is there more room to rally?
Good morning. Thank you so much for having me. It's a pleasure to be on the program. It's definitely been absolutely amazing growth story for NVIDIA, and not just in terms of the price, but also if we look at the revenue numbers, if we look at the margins, if we look at earnings per share, it's actually a pretty complete story. And if we compare so-called momentum-driven stock price of NVIDIA with other very, very bullish markets, let's say Bitcoin, for instance, we actually have fundamentals this time. We have a tangible AI story. We can see that we have pretty sustainable revenue growth, I think 262% last quarter, which is just mind-blowing, as well as gross margins north of 70%. So I think that NVIDIA and AI still have legs to go. There will be more increase in the stock price. But unfortunately, this can't go on forever. NVIDIA share price is now at least 3 standard deviations above the mean. If we look at momentum trading, if we look at statistical sort of analysis, it will have to pull back at some point.
Yeah, and a sort of a double-barrel question here. I mean, if it does pull back, at what level does it look like a buy again? Because it is very expensive. And considering how expensive it is, if you're looking for exposure in this place, are there other places you can go a little bit further down the value chain to get a good return?
Absolutely. I don't have a strong view where we can see the pullback. I reckon it will be anything between 5 to 10%. And surprisingly, NVIDIA has been trading almost like a penny stock. We've seen massive swings, both upside and downside. But in terms of other plays in the AI space, of course, we've seen energy stocks, we've seen utility stocks doing remarkably well. Compared to, let's say, some other S&P 500 sectors. But if you want to participate in the AI story, there are other companies. I mean, TSMC, which is up obviously as well, but it's a bit more affordable, or even European ones. Let's say ASML, which now has become Europeans' second largest company by market cap, but they tend to be a bit more affordable than NVIDIA.
Yeah, let's move to Europe now. In fact, I want to talk a little bit about the ECB. Of course, we have that meeting later today, that 25 basis point cut seemingly nailed on. But what's your view on the timing of this cut, the signalling that's happened ahead of it? Are you confident that inflation has been sufficiently slayed in Europe?
I think Madame Lagarde definitely is patting herself on the back that she's actually moving ahead of the Fed. Not something we have seen from the ECB in a long, long time. Unfortunately, Eurozone struggles with the same problems as most of other large economies. We've seen fairly sticky inflation. It's in different pockets of the economy. It's in the services. And now it's moving into goods inflation in Europe, but also wage growth. But I would say the main problem in Europe is obviously the different dynamics of the different member countries. And this is something that Mark was alluding to earlier as well. And Eurozone is not like the US. Countries are still independent. They can even vote to exit European Union. They can exit to vote the Eurozone, as we have seen with the UK, not the Eurozone, but the EU. And that actually is a political risk as well, in my view. And a good indicator, for instance, is ongoing European Parliament elections. My country, Estonia, has the only e-voting system, meaning that you can start voting a week before. The turn-up poll has been extremely low. It's about 8 to 7%, which is a signal that probably the peripheral countries in the Eastern Bloc that are seeing higher inflation may be distancing themselves from the European Union and from Euro.
Well, markets are pricing in a second cut. The question just seems to be when. What's the answer to that question for you?
I wish I knew. I would trade based on that, but I don't think it's going to happen in the near term. I think that the signaling or the telegraphing of this particular decision has been so strong that the ECB doesn't have much choice. They have to cut today. However, looking at the data, I mean, inflation 2.6%, wage growth 4.7% tells me that most likely they're going to pause. But at least they've done something. And I think a lot of the central banks are itching to do something. The ECB is the first to move, but I think they're going to stall at this point. But hopefully it will give a bit of fresh air into European economy. Although it's been doing pretty okay, given that the real rates are positive the first time since 2007.
I want to pivot to Asia now. Just you do a lot of work in the space of credit. How is the credit environment looking to you at the moment?
Credit is tight in Asia, as it is in Western economies as well, in Europe or in the US. We are seeing quite a bit of action, I would say, even from local banks in different Asian countries, offering some sort of liquidity to the market in the form of credit, but they are being extremely selective, meaning that it's still the blue chip companies, be it in Indonesia, be it in Singapore, be it in Thailand, although Thailand is on a bit different path for now. So the banks are extremely selective where they want to give that liquidity and which companies they want to finance. So there is a huge segment of the market, the SME sector, that is still desperate to raise money, be it through equity market, be it through debt market, to credit market. And luckily, we're seeing in Asia a bit of more momentum from alternative credit providers coming to the market.
Before we let you go, Kai, I want to talk about India, of course. We did see a pretty heavy pullback in equities this week after Narendra Modi got back into power, just not with the majority that he was perhaps hoping for. Do you view that as a buying opportunity long term? Is the narrative for India still firmly intact?
What a historical election result from India. I think it's a great win for Indian democracy, maybe not so good win for Modi and BJP. However, India is on a great trajectory. We are seeing very favorable demographic growth. We are seeing structural reforms. We are seeing willingness and ability of the ruling party to execute on those reforms, which definitely will be questionable going forward, because now you suddenly have coalition partners that you have to consider. Having said that, India will be the growth story for the next 5 to 10 years. The prices seem a bit steep for the time being, but again, if we look in the global context compared to US equities, even some European equities, I think India is still a great place where to allocate.
All right, Kaya Pav, CIO of CreditLink.ai. Thanks so much for joining us. And we do have plenty more to come as well. This is Bloomberg. All right, let's take a look at how we're doing in Chinese markets as we head towards the lunch break. Got the Hang Seng doing pretty well, better by 0.5%. A little bit of a mixed picture elsewhere, though. The Shanghai Composite kind of flat. We've got the CSI 300, though, better by 0.33%. That story changes a bit when you start digging into sectors a little bit more. I want to focus in on Chinese property stocks at the moment. They have fallen 20% from their high in May. So concerns continue to linger over the health of this sector. Take a look at Sunac there, off by 10.2%. So now we are in technical bear market territory, even though we had that package unveiled by the central government on May 17 to support the market. Seems to be a bit of skepticism there. Not much improvement in fundamentals, according to Morningstar. Still to come. Aberdeen says it's staying positive on India in the medium term, despite this week's surprise election result. Their senior investment director joining us next. This is Bloomberg. Welcome back. China markets just heading to lunch. Let's take a look at how we're doing. Not too bad at the moment. We've got the CSI 300 better by 1/3% right now. Shanghai Composite is pretty flat. Meanwhile, tech stocks have been doing quite well, as we've been discussing. Property stocks, not so much. And we've got the yen right now trading 724.42. All right, let's take a closer look at what's happening elsewhere in markets in the region. Avril Hong's here with the details. Avril.
Yeah, Paul, we're just about to come back from the lunch break in Japan, and today we're seeing the tech shares really participating in that rally after Nvidia crossed the $3 trillion market cap, really helping to lift the mood. And we saw the likes of Advantis, Tokyo Electron today. Those were the stocks that were helping to boost the Nikkei, the biggest, kind of gainers in a way on the benchmark there. We see it entering the lunch break, gains of about 0.9%, and also seems to be hanging on, actually pairing some of that as we're back from the lunch break. Something else we've been keeping a really close watch on in Japan, those bonds amid those lower US yields, and that should be good for Japan bonds. We're seeing actually the yield on the 10-year crossing below the 1% level today, keeping an eye on the currency as well after the BOJ board member, leading dove on it, Nakamura, said policy settings seem to be appropriate for now, and the yen moved off the session lows, or session highs, I should say, against the greenback, the 155.3 level, pairing those gains now. Let's flip the board because I also want to talk you through what we're seeing in some of the EM Asia currencies as we are monitoring those escalating tensions between the Thai government and the central bank. That's presenting some risks for the local markets. And even though investors had been dipping their toes back into Thai bonds for the month of May based on the latest available data on global funds, that actually pales in comparison compared to what they did for Indonesia, India, South Korea. We're seeing the Thai baht also recovering some lost ground today thanks to that softer dollar. Indonesia's rupiah is one that we've been watching really closely. Yesterday, weakest level against the greenback in 4 years as investors started unwinding the carry trade, and we're seeing that also the Bank Indonesia kind of stepped in today, a bit of that rebound as well. Flip the board, of course, we've been keeping a really close watch on cross assets in India, and the stock market's expected to extend that rebound today. Of course, the extent of it is really something that we'll be keeping a close eye on. We'll find out in the next 15 minutes or so. The rupee weakening further as we're seeing it pushing above the 83.40 level. Bonds also doing okay today. Paul.
All right, thanks, Avril. Well, the Indian election, of course, top of today's big take. It's a closer look, or the topic of today's big take, takes a closer look at why some voters are frustrated by an economic boom that has left 600 million residents behind. Bloomberg government reporter Sudhi Ranjan Sen joins us now from New Delhi. Sudhi, I can't help but think this looks a lot like the situation 20 years ago. Back in 2004, the BJP suffered a shock defeat because the India Shining policy didn't do enough to lift people out of poverty. And another interesting parallel there, the state leader in Gujarat during that time was none other than Narendra Modi. Any lessons from 20 years ago?
Well, there are huge lessons and similarities because just as 20 years ago, I mean, there was this very, this confidence within the BJP, of course, then under a different prime minister, of sweeping Indian elections. And this time we saw the rhetoric coming from the BJP, from the prime minister, which was like, we are going to win 3 out of every 4 seats in the parliament. And therefore, the muscularity of his campaign, that followed. But clearly, on the ground, that message wasn't clearly, accepted. That message didn't go down well because we've seen the Prime Minister losing in key states. In fact, the state, India's most populous state, that is Uttar Pradesh, from where Prime Minister also is elected to the Parliament, didn't quite give him the kind of, numbers that they were expecting. In fact, that's a huge shocker for the BJP. And not only in one state, there are several states that this trend is kind of held. Although in the eastern part of India, in a couple of states that the BJP has done well. But in some, it's not a great sign for the Prime Minister. It's not a great sign for the BJP, which is now having to, lean on and on their coalition partners for numbers to form the government.
Yeah, and that's the key difference here. I mean, unlike 2004, the BJP has survived this election, but as you say, now relying on coalition partners. So how is that going to change the agenda, particularly in the first 100 days? Are we going to be looking at more policies that are more friendly towards those people still struggling in poverty?
Most likely, because both the coalition partners and the Prime Minister has kind of included in the government formation, which we're going to see in the next couple of days. People are political parties and political leaders who have socialistic background, who kind of will ask for bigger welfare measures, and rightly so, because the rural distress in India is clearly showing, or one of the things that shows in the elections, because the BJP has not really done well in constituencies that are predominantly rural, predominantly has villagers, predominantly has farmers. So that is one area that is going to be of key concern. And although India runs one of the biggest free food programs in the world, that clearly doesn't seem to be enough to convince the voters. So there must be some bit of change that we can expect will come in the next few days, or will be a priority for this government.
Okay, so two small coalition partners here, the National Democratic Alliance, the Telugu Desam Party as well. They've got a history of switching allegiances. The parliamentary term is 5 years. Can Narendra Modi go the distance?
Well, that's a big question. That's $1 million question, and that's exactly what the opposition, which has come back with much larger numbers, and therefore India is going to see, much more healthier, much more robust democracy, much more robust discussions in the parliament. At least that is what we can expect. And whether Prime Minister is able to carry forward, carry on with his coalition partners, big question. One quick thing that I would want to mention: in the last 20 odd years, 2 decades of the Prime Minister has been, leading either the state of Gujarat or has been Prime Minister. He's never had to deal with a coalition. The push and pull of a coalition government has never been kind of his concern. He's never handled coalition pressure. So that is one of the questions that everybody seems to be asking. What next, therefore?
All right, our government reporter Sudhi Ranjan Sen in New Delhi. Thanks so much for joining us. And the dramatic market swings we've seen after the Indian election results this week have investors debating whether this uncertainty presents a buying opportunity. HSBC Asset Management Global Chief Strategist Joe Little gave us his view earlier.
Political risk, election uncertainty has been a long-term buying opportunity, particularly for value-minded investors or contrarians who can take advantage of big lurches in prices. My concern is that we've arrived at a slightly different situation today, where geopolitical uncertainty is more of a feature of the economic and investment environment rather than a bug.
Well, our next guest does view the post-election market rout in India as a buying opportunity. So let's get now to James Tom, Senior Investment Director for Asian Equities at Aberdeen. So, James, we just heard there that Narendra Modi, for the first time ever, are going to be relying on coalition partners. You say it's a buying opportunity, but is there now a bit of a warning label attached to that?
I think things get a little bit harder from here, obviously. So, as your correspondent highlighted, this is the first time that the Prime Minister will be in a coalition situation, and that clearly makes pushing through reforms more difficult and complicated. Having said that, I don't think it derails the broader India story. I think the foundations actually have been laid already in the first 2 terms of Modi's government, and that is what is and has been propelling India's economy onwards and upwards and turning it into a relatively brighter spot in Asia, and I don't think that this outcome changes that. It will introduce some volatility in the market, as we are seeing already in the near term, but our medium-term view is that the outlook remains positive for India.
Yeah, and to reinforce your point, as you're speaking there, we're seeing futures there for the Sensex, other markets as well, in positive territory, suggesting we're going to have a rebound from the selling that we saw a little bit earlier. But if we take a look at this chart, I'll describe it for you. It shows forward PE ratios for India, 23 times earns, so pretty expensive. When you look at that, do you still say, well, that's an entry point, or do you wait for a pullback and buy the dips then?
I mean, I would always kind of try and buy the dips, and there's no doubt that India is an expensive market, but it's always been an expensive market. It's always traded at a premium to other parts of Asia and emerging markets, and that reflects really the long-term growth opportunity. And as I say, that's undimmed in my view. I think the best approach is to look at this on a sort of stock-by-stock basis, and we have seen some very sharp moves, and valuation multiples compress quite nicely, and that's where the opportunity is, I think, amid all of this volatility and near-term uncertainty.
Well, ahead of this, we often talked about the Modi stocks, particularly around infrastructure, finance as well. But now, as we were discussing, he's got a couple of coalition partners to consider. So, in your view, does this change the reform agenda, and does this change the way you view what's investable in India?
I think you have to rethink it a little bit. Our base case was that there wasn't going to be any big bang reform. Maybe had we seen Modi come home with a thumping majority, that could have changed the narrative, and some of the thornier kind of areas could have been tackled in this third term. I think that's now unlikely. So our expectation is that we'll see a sort of continuity of reform and policy, and that will be broadly supportive for the Indian economy. Having said that, so far we've seen a big emphasis on infrastructure spending, to your point, around those stocks doing well, and government spending around capital expenditure generally. That may moderate a bit, and we may see prospects sort of dim slightly there, although I think there's still a good story around the infrastructure and kind of capex cycle in India. So we'll monitor that. In contrast to the earlier points made in the earlier segment, as the government takes note of voters and shifts towards focusing on the rural economy and that very large segment of the population, that may be positive for consumer spending and consumer-related stocks in rural India, which has been lagging quite considerably in recent quarters.
So those are the ideas for areas to look to invest. Are there any areas that you'd be avoiding in India right now?
I think, I won't say avoid, but I think where you have to tread with some caution will be around some of the government-owned companies. We're still waiting to see what sort of deal's been struck by the Prime Minister in forming his coalition, who's going to take the key appointments in the sort of key ministries, and whether that changes the outlook for some of the so-called PSU stocks in India. So I think there I would just tread a little cautiously, and we have relatively light exposure to government-linked stocks. So that's one area. I guess the other would be, again, just to tread with caution, would be in the small and mid-cap segment of the market. It's massively outperformed over the last year to 18 months. Valuations have got frothy there, even in an Indian context. And whether, some of the retail investors, and a lot of the flows have been domestic and retail driven, whether they feel a little gun shy off the back of this election, we may see a moderation in that part of the market too.
Okay, well, we've got a Reserve Bank of India policy at the end of the week. All the noise from the election campaign is now out of the way, but I know you note that the economy is still under pressure. We've still got a situation where inflation is sticky. What are you expecting to hear?
Yeah, I actually think, inflation's sticky, but not at particularly concerning levels, and it's been, stable for quite some time now, and India is used to higher inflation, so I would expect probably we'll see continuity in monetary policy as well. And actually the economy, has been performing pretty well, so it's not as if there's a strong need to come through with some loosening of policy to support it. I think we've seen very solid growth at an economic level, and corporate earnings have been reflecting that as well.
Now, I know you like the real estate sector in India. I just want to get your view on the country next door. What's your view on the real estate sector in China at the moment? Because we've just seen property stocks there slipping into a technical bear market. What's the outlook?
Still challenging, I think. We've had the policy announcements come through in recent weeks that provide some reassurance, and I think in particular point to the fact that the government is aware of how critical the issue is here, and the need to address both the supply dynamics and the demand side of the equation. So I think that's an incremental positive, but lots of question marks around how that policy and an additional capital gets deployed and implemented, particularly to soak up the existing inventory in the system, and that's even if that's solved for, it's going to take time. So I think not surprising to see the China property stock still struggling in the near term.
All right, James Tom, Senior Investment Director, Asian Equities at Aberdeen. Thanks so much for joining us with your insights. And let's check at how the Indian market is doing at the open. And to James's point, seeing a recovery here. We've got most of the major indexes back in positive territory. We've got the Sensex there better by 0.4%. The Nifty Bank Index better by 0.6%. So the market's already going some way to recovering some of the losses that we saw in the selling earlier this week. Coming to terms with the fact that, yes, Narendra Modi is back as Prime Minister, but no, he doesn't have the majority that he necessarily hoped for. Still, some of these big infrastructure names are doing well. Adani Enterprises, that group performing strongly, particularly Adani Power, better by 5.5% right now. Ports, especially Economica, also better by 1.8%. All right, still to come. We're going to talk about the shares in the Japanese space startup Astroscale, coming under a bit of pressure after surging yesterday on their Tokyo debut. We're going to hear from the founder of that company up next. This is Bloomberg. Let's get to an update that we're following with Boeing. Boeing's Starliner capsule finally taking 2 NASA astronauts into space. This is after years of delays and cost overruns. Now it's on track to dock with the International Space Station on Thursday. NASA is using the flight to prove Starliner can safely carry people to and from the ISS under the agency's Commercial Crew Program. Staying with space, we're also tracking the second day of trading for newly listed Japanese company Astroscale. The private orbital debris removal company is looking to tackle the so-called space junk problem. Now, this is dangerous debris from old rockets and satellites traveling at uncontrolled high speeds. Just to give you a piece of context, debris in space can travel at speeds up to 15,000 miles per hour, 24,000 kilometers per hour. That's 10 times faster than a bullet. At that speed, even just a fleck of paint can cause immense destruction. We're seeing shares pulling back a little there for Astroscale, 4.3% down, but that's after rallying more than 80% yesterday. Earlier, we spoke to Astroscale founder Nobu Okada about their plans for the company.
The funds will be put towards research and development as well as working capital, as we did with the previous funding. We're currently demonstrating our rendezvous and proximity operations technology in space. This technology is the foundation for 4 businesses we're developing. The money from the IPO will help us push through our R&D in these areas.
There's still a high level of uncertainty in this business. You yourself are still years away from cleaning space junk. Why is now a good time to invest in astro scale?
The threat of orbital debris remains unpredictable. That's why it's important to act now. We already know that orbital sustainability will become impossible if we don't tackle the rapidly growing number of satellites, space debris, and junk. That's why we're taking the lead in developing the RPO technology and creating business models. Our work is contributing to creating the global rules.
You've said you want to win business from the private sector, not just governments and space agencies. Why would a private company care enough to pay you to clean up space debris?
We're fielding contracts for projects worldwide, mainly from government agencies. In space, the risks are high, but the rewards are low. That holds true for the private sector, too. We need to turn around the trend. Orbital services can do that. That's why we see a lot of interest from the private sector.
As we wait for updates on the AUKUS-J mission, what's your next milestone?
So, the 4 business areas I mentioned earlier, they are end-of-life services for retired spacecraft, life extension and inspection of satellites, and active removal of debris. Our next big step is to demonstrate the value of these space capabilities to the clients in the fiscal year 2028.
And why are you so passionate about solving this problem of space debris?
When I first heard about the space debris problem 11 years ago, I started this project immediately. Back then, nobody had a solution. I saw a good business opportunity, but I also felt a sense of duty, that someone had to solve this environmental problem. I consider this venture as my final gig in life.
What are your hopes for this IPO and this stock now?
The issue of space sustainability has become a truly global and urgent one. There's no time to waste. I hope to see many take an interest in the issue of space debris and the environment.
That's Astroscale founder, president and CEO Nobu Okada speaking there to Bloomberg's Karumi Mori. Plenty more to come. This is Bloomberg.